Welcome to Alpha Talks Editors Roundtable, what moved the markets this week for Friday, June 19th, 2020. I am joined once again by the brain trust of Seeking Alpha editors, Bradley Olison, VP of News, Aaron Task, VP Contributor of Content, and Stephen Alfer, Managing Editor of Breaking News. I am your host, Nathaniel Baker, a contributing editor here at Seeking Alpha. Okay, it was another positive week for stocks, not quite to the level of FOMO, much less POMO, which as we know means panic of missing out, as we had seen in previous weeks, but nevertheless, positive week for stocks. There was some selling at the beginning of the week, and then the Fed came in with their announcement that they would buy corporate bonds, and we have basically rallied from there. Some other things factoring in, of course, we'll unpack all of that and more, starting as we always do with Aaron. Aaron, what was your take on this week?
Right. Well, the thing you hit the nail on the head, the Fed's move, it was on Monday. The market was looking like it was going to be another big down day. And again, a week ago Thursday, we had a huge sell-off and people were getting a little nervous. Open up the week with another big sell-off. And then the Fed stepped in and said, hey, we're not just going to be buying corporate bond ETFs, we're going to buy individual corporate bonds as well. And that really injected a huge dose of confidence into the market. In short order, the message of the market this week was don't fight the Fed. And if you try, they're going to knock you on the head.
Yep. Yeah, don't fight the Fed no matter what you do. The S&P was flirted a little bit with dipping below the 3,000 level, but is nevertheless in safe territory, 3,100 and change as we record this on Friday. Brad, what do you make of all the technicals and all the other stuff?
So, I mean, as Aaron said, like we kind of bottomed on Monday and we never looked back. I mean, I think we saw some of the brief virus concerns emerge from Beijing. They had a sort of a mini outbreak there. And, after that point, it was just straight up after the Fed. Some of the major moves that I saw that are emblematic of this, I guess, more risk on environment. Obviously, the pain trade is higher. The path of least resistance is higher. We've seen that. Some of the breakout movers that I saw, some interesting names, travel centers, that's the symbol TA. They're associated with a lot of these truck stops, right? They do a lot of quick service. Food up 42% this week. Bed Bath & Beyond up 35%. I'd like to take credit for the next one, Camping World. We talked about that 2 weeks ago with our prep or trade discussion. That one was up another 25% this week, that's just phenomenal. And those kind of lend themselves to a lot of this risk on environment. And the fact that there's just a lot of, strong investor sentiment to just buy anything that you can get your hands on. So definitely, some animal spirits in the equity markets. That's kind of lent a little bit of a lot of the fund manager surveys and others to say that we're a bit overvalued. I think we're in the top 5 or 6 percentile in a lot of the evaluation metrics like EBITDA, enterprise value. I think one of the bigger notes that I saw this week from Bank of America fund manager survey, the largest number of fund managers since 1998 have said that the market is overvalued. A minority think that there is a new bull market, but famously, one of the more famous market strategists, Morgan Stanley's Mike Wilson, said that we are in a new economic cycle and a new bull market, and that was on Monday.
There was a lot of corporate news, also earnings. One notable one that I saw is that Carnival Cruise Lines, to the surprise of one would hope absolutely nobody, missed earnings in a major way, and the stock sold off on the news. I'm not sure if it's recovered, but Stephen, why don't you get us caught up on all the corporate news from this week?
Yeah, I did see the Carnival item, and whether they beat or missed is pretty irrelevant. Everybody wants to know what it looks like going forward for them. The earnings report that stood out to me was from Monday was Lennar, which reported, considering everything, a solid quarter, but more importantly that their May things really turned up for them, and they have a very positive outlook going forward. The CEO said on the transcript, the all but certain migration to the cities is over.
Yeah.
and kind of a little, maybe a little zing against the folks who were negative on the home builders for years, because everyone was going to move to the city and live in apartments.
That's a good lead into the second part of the second segment of the show, which is the favorite stories that we saw this week. Bradley, I have a feeling I know where you're going to go with this, but let's have you kick it off this week anyway.
Well, I mean, I purposely went the other direction just to throw you off.
Fine.
Just because I know you guys want me to talk about another Kardashian. Yes, Spotify did add a Kardashian to their lineup. I think we talked about the Joe Rogan news just a few weeks ago on this program where, they brought on, the famous podcaster, shares surged. Just a brief shout out to the company. Their stock has been on an absolute tear since then. So we can't completely ignore it just because a Kardashian was brought onto the lineup. Up double digits and up almost 80%, I think, since we talked about it just a month ago, thereabouts. But I mean, I'd like to talk about a different news story if that's okay.
I guess we can allow it.
Yeah, I think some of the bigger items that I thought that were interesting was this. We've all been searching for that cure for COVID, right? And I think we're all been focused on the Gileads of the world, looking for that silver bullet. When lo and behold, a 40-year-old generic steroid comes along and takes the market by surprise. The UK NHS did a study with researchers that found that this new corticosteroid, I think it's dexamethasone, if I pronounced that properly, found that it could reduce death rates in COVID patients by, I think, 28 to 40%. Market like that, a huge reason as to why we got a little bit of that bounce in the early part of this week.
Well, on that same theme, one of the stories that caught my attention and our readers' attention this week was by Regarded Solutions as the contributor, Retirement Safety, a safe dividend king with an upside potential of nearly 50%. And it's about Johnson & Johnson, obviously, 50 plus years of dividend history. We know about they've got some issues with their baby powder business and some lawsuits, but basically he's making the case here that their dividend is safe, and they are also working on a vaccine. And so, we're getting caught up in, the Modernas of the world and some of the smaller companies, but Johnson & Johnson, if things work out, you could have huge upside to a mega cap company with a safe dividend and a history of paying dividends.
Well, we kind of touched on it in the first segment, but I wanted to come back to it. Was the Fed buying bonds? The folks at BMO, the fixed income team there, had a really good note about the kind of the fancy legal footwork that the Fed had to do in order to actually buy individual bonds, and included setting up basically their own index when there's plenty of indexes already there. But the bottom line is that the Fed is going to do whatever it has to do to support the markets. And there's really no indication that the markets need to be supported right now. I mean, they're going straight up. I don't know what else they want. But to me, that lays the groundwork for if the Fed right now is prohibited legally from buying stocks. Loretta Mester, who I believe heads the Cleveland Fed or Philadelphia Fed this week, was asked that question specifically, and said we can't do it. But the fact that the central bank did all that legal maneuvering in order to buy bonds tells me when they decide that they need to buy stocks to support this market, they're going to figure out a way to do it.
Yeah, look, we're just one day closer to the Fed buying stocks, all right?
Yeah.
Let's just face it. There's no way, we can't fight it, and don't fight the Fed. And we'll see. I mean, it may take some selling for them to do it, but I don't know. I have no reason to believe that, of course, but it is pretty interesting.
Well, that is the sentiment. I mean, again, getting back to Davey Day Trader and this idea that stocks only go up. And I think that's what's, undergirding it for a lot of, especially newer investors. This idea, well, if things go badly, the Fed's going to step in and bail us out. And that sentiment can definitely, produce a frenzy type market where by any traditional metric it's overvalued and people are skeptical, but right now they're holding their nose and they're buying.
But you have to, if you don't have any sort of data underpinnings to judge it from, right? We saw a whole bunch of, the researchers, the economic research, we saw a little bit of this a couple of weeks ago with the non-farm payrolls report, where all the consensus is just widely underanalyzed at this point. I think 3 separate economic indicators this week all blew it out of the water. It wasn't even close.
Yep.
So in the absence of any sort of tangible data to hold on to, the bias is going to be upward until we can actually take a lot of these, data points seriously.
Yeah, it all speaks to the fact that maybe just the economic damage was not as widespread and as serious as was believed. Of course, then I say that, but you have 40 million unemployed. So the layoffs have been very real, but people have still been spending money, right? Which has been propping up retail, and which we saw on, I believe, on Wednesday, and other things. I mentioned real estate at the outset. So who knows what that all means. Meanwhile, I'm old enough to remember the Greenspan put, which was, they're going to cut rates to help the market, whereas we've now moved well beyond that to zero rates, quantitative easing, buying bonds, buying ETFs, and coming soon, probably buying stocks.
To Stephen's point, if they feel the need, they're going to find a way to buy stocks or your house or your car or whatever else they feel they need to do if they continue down this path. If you draw
that old stationary bike laying in the barn.
Yeah, exactly. Yeah.
Lastly, my favorite story was very much to Aaron's point. This is from Michael Wiggins de Oliveira, just posted this morning. Amazon, a new narrative is about to unfold. He says that AWS will play an increasingly smaller aspect in the overall narrative here, but that there is still significant upside to the tune of up to 50% in a stock that was trading around 2,600 per share, I think, or something like that. Yeah.
And their market cap's over $1 trillion now, right?
Yeah, it's over $1 trillion. He says a possible target $2 trillion. So
why not? Why not? Right?
Yeah, I mean, I figure this is either a sign of a top, another one, or he's onto something, and Amazon is conquering the world, and people are using it more and more and more and more, especially in this day and age of COVID. And hey, just who's going to stop them? Nobody. So I thought that was pretty cool. All right, that's a good way to close. Happy Father's Day to all the fathers out there, and thank you all for listening.
Thank you.
And we look forward to speaking to you again next time.